Graveyard shift, thank you very much. Hope everyone stays awake. So, Mark Hover, TCC and Recordsure, probably a name that you haven't seen before in the collections and recoveries world. My background is C&R all my working career. Cut my teeth with NatWest, GE Capital, Capital One, and then moved into fintechs, the founding member of TDX Group, which exited to Equifax, and then OpenWorks, was looking at open banking, that exited to private equity recently. So I've got a view of collections and recoveries, but a very good view of data analytics and technology in the way that we do that. TCC and Recordsure are two companies from outside the sector. So TCC, 20-year-old consultancy company that deals mainly in the wealth, pensions, mortgage world. And Recordsure, a fintech that was set up to provide it with some technology that is used in that area. And I'll use that technology as a bit of a case study today. What I wanted to talk about is, can RegTech, i.e. that technology, help to effectively support consumer duty? Now, we've touched a little bit on consumer duty at the moment, and I've called it Show Me, Don't Tell Me, and I'll cover that why that is in a moment as we walk through. So consumer duty, where are we today? Well, the journey that we've been on, July 22, when they published the consumer duty requirements, October 22, when everyone was supposed to have their plans in place, April 23 is the next deadline, when we all are supposed to have committed reviews of our processes and procedures against consumer duty, before a go live, which is now only 4 months ago, which is quite scary. We think, and looking around with our TCC hat on, that consumer duty has not really yet impacted on collections in a major way. And there's a couple of reasons for that. One is the planning stage of consumer duty is really owned by the main compliance or business risk function in a company. And in doing so, consumer duty is much wider than what we know as TCF. And there are some bigger gaps involved. So put gaps in the product, gaps in the acquisition of customers, etc. in there, and they put a lot of the focus on that. And they put a lot of focus on that because we as collections professionals have been talking to them and saying, actually, we've had TCF since 2006, we're all right, Jack. You know, we do things well, we do things in a compliant way, we're good. But our reviews show that collections and recoveries management often don't have all the tools that they need to provide the evidence they're required in consumer duty. And that's where the show me, don't tell me comes in. So if I look at TCF and I was to do a comparison of the two in a really, really high level way, TCF is about tell me that you have the policies, the processes, the strategy in place to deal with your customers fairly. And we all do that. We've all done that. We've all spent hours reviewing policies, reviewing processes, reviewing procedures, etc. People are smiling and grinning there. I know your pain. But consumer duty comes in to show me, and show me the evidence that not only your policy worked, but your policy worked for Mark Hover as he came through your process. So can you evidence the fact that a customer journey went through there and that customer got the right outcome at the end of it? And that's a massive difference from where we are on TCF. And I don't think that's sunk home yet. I'm not preaching across everyone and stereotyping everything, but what we found, I don't think that's sunk home yet. And there were some Dear CEO letters sent only last week. And there were two, one for collections, recoveries and debt purchase, and one for debt advice. And in the collections and recoveries ones, the FCA say they've identified that some plans and some firms may be further behind their plans and they're planning for the duty. And the risk is that they may not be ready in time. And within there's another paragraph in there which actually says that we are too reliant on existing policies and processes and existing levels of compliance review for the new duty. So let's be careful on that. These were only issued last week. Search the FCA, they were issued 21st of February. It's actually worth looking at those and just having a read of it because they're specifically targeted at each individual section. So there is a specific letter for collections and recoveries and debt purchase. So, outcomes testing versus QA. And the reason I want to get into this is because I look at this and say we rely a lot on having the policies and processes, and we rely a lot on QA to say, are we adhering to those policies and processes? So there's two open questions. Can collections and recoveries provide that evidence that's required for consumer duty today? And for my vested one for me here, do we think the days of random sampling are limited in terms of the way they come through? Outcome testing. So if we think about the product and the outcome testing that we go through, there are some great examples that I can give you that are out of our area. So for example, if you're a credit provider and you're issuing a credit building credit card, etc., and you issue that, and 2 months later the customer is maxed out on it instead of using it as a revolving product, then maybe that wasn't the right, and the customer outcome isn't the right thing. But for collections and recoveries, how do we provide that journey? So someone has gone through that, and it may not be the product, it may not be the acquisition, it may be their change in circumstances that's thrown them through the collections process. But how do we provide and how do we evidence that what we did for that customer is the right thing as they go through and they got a good customer outcome out of it? So I'm going to give you a bit of case study of how we use some of the technology that we provide in other markets and how we've adapted that for collections and recoveries. And we call this Conversation Review AI. If I take your QA process today and I take a QA process today and I will look at your process and I will ingest the telephone conversations, all the web chats that are coming, etc., and that, all the emails that are coming there, I can ingest those processes in. And normally, I would get a visual of a call that goes through. So I've got a visual of a call that goes through the top, and I can turn that into a transcription. This technology has been built in the mortgage, pensions, and wealth world, so it's absolutely tailored towards financial services. So it recognises not only the wording in the financial services, it also recognises the context that it's used in as well. And the techies beyond me will talk about deep neural networks, etc., that do this, etc., as opposed to how it pulls that across. So what we get is we get a record of your conversation and we get a transcript below. So when your QAs come to do that, they can use that, and if you've ever QA calls yourself, you know sometimes you don't hear what the customer said. You take a step back, you have to rewind 20 seconds, and you go again, and you still don't do it, you rewind again and go. What we do is as we play that conversation back, the transcript at the bottom moves, and actually you can read the transcript, and it goes in line with the conversation you hear audibly. So actually what you can do is you listen to that, and you can see it and read it, and you actually find you QA a call a lot quicker than you do normally. So that's the first bit we do, and you think, well, what's different from that we do? You're just providing a transcript. What we've done is taken that base level of information, how we come through and provide that transcription, and then overlaid it with something we call Classify. What Classify does is Classify takes that conversation and it breaks that conversation down into the user-defined areas that you want them to be, and it color codes them. You won't read the wordings at the top in there, but you might find the purple at the start of the call is the ID and V. The brown is the affordability conversation, or the customer, or find out their circumstances, etc. The green might be the payment negotiation. And in doing that, what you can do is jump around that call to go from the individual areas that you want. So if you know, for example, when the pandemic started, we knew that when people were working from home, there was a lot of the ID and V that sort of got missed, and that went a bit lax in the process that went people through. So if you're looking for a particular agent or you're looking for a particular network, you can jump straight to the ID and V section of that and listen to see, did they do that or did they not do that? So your QA process can take you through that and can identify the sections of that call that goes. The bits in the middle in white might be they're talking about the weather. They're talking about something else that go through. It's not relevant to the conversation in terms of where it goes, and therefore we haven't classified it to an area that you want to have a look at. So Classify breaks that conversation down and then makes it easier and quicker to review, and gives you your ability to jump about. What we then do is put a process called Assurance over the top of that. And what Assure does is apply your QA risks. So what it basically does is take your QA framework and the tick box parts of that to say, did I talk about affordability? Did I do ID and V? Did I do all of that? And listen to that, and applies it across that and adds a risk score to it. So Assure will actually listen to that conversation, it'll listen to the context of it, and it will then come and give you a risk score to say, did it do that or did it not do that? And it'll apply it in green or red as you go through below. And you can set those. We set those according to you, and there's two things that we can do. We can build those to your requirements, or we can build those as a collections and recoveries model. And there's a collections and recovery model because if you think about where this comes from, it works in mortgages, it works in wealth and pensions because we're in a FCA-regulated environment, and we provide a really standard call that goes through. Collections and recoveries is virtually the same as that. You know, there's ID&V, there's customer circumstances, there's affordability. All goes through a fairly structured element of it. So we can turn around and put your QA checklist across that to say whether it was done. And that then gives you a score that comes out and tells us where we are on that conversation that goes through. The dashboard lets you move away from a random sampling and your QA element of sampling to actually listening to every call, assuring every call, and providing you with the ones that have passed or failed your QA process. So in effect, when you talk about evidencing consumer duty, you move away from random sampling and you move into 100% oversight of your book. And the dashboard will give that. So the dashboard will then allow us to customize it to show you what we actually achieved in terms of that, which were green, which were red, and which parts of the conversation. So from the dashboard, you can pick up the volumes of calls that failed. You can pick up the areas that they failed in. So then you can look at, do I have a systemic risk in my process because X number of calls failed a process, which may need to go back to my product, I may need to go back to my strategy, I may need to go back to my case handling, or I have a training and compliance need in there that goes through and does that. So the dashboard gives you the view of what you basically do as you go through and how we go through. But it also enables us to pick out the calls that you wanted that failed the QA process and puts those over to your QA team for review. I talk about business case, and I don't mean business case in terms of financial, but I'm talking about business case in terms of how it meets your consumer duty element of it that goes through this. If you think of where we are today you have 100% of your calls, etc., that are received, and you may QA 10% of them. If you QA 10% of those, and out of the ones that you actually listen to, 92% are good and 8% are bad. That's roughly what we find in terms of that. And when I say bad, I mean failed regulatory. You may have some coaching bits in there, but 8% are roughly bad. It means that out of the calls that you've got, a whole load of those in that white section went through that were bad, i.e. you've got a customer situation and a customer journey that's not there and met your requirements, but nobody's picked it up and it's gone through unchecked. And you haven't been able to react to it in terms of where you go. So your 100% of your QA resource today reviews those calls that you do, and they spend expensive QA resource listening to good calls. Where we move to is we look at the total calls received, and we look at conversation review AI and classify to listen to every one of those calls without any human involvement. What we'll then do is we'll take those scores against your QA card, we'll take your risk score, and we'll put those down and route all of the bad calls into that 8%. So that actually your FTE that are in there reviews just those bad calls that go through. So instead of a load of calls going through your process without being picked up, you pick up every call that's in there, you have the ability to action it, you have the ability to pick up training needs in there as well, and actually you can do that with less FTE. The less FTE in there isn't, and I talked about this not being a business case saving in there, I talked about this as being a case saving in terms of, because what we will need to do is under consumer duty, we'll need to do some outcomes. So if you had a customer go through that process that needed financial difficulty and came into financial reserve, did you refer them to debt advice? And if so, what was the outcome of that? Was that the right decision, and was that the right decision to go through? We'll still need to do some checking and some additional checks to meet consumer duty that QA tick in the box, etc., doesn't do. Right? That's going to be really important, and that's one of the big differences between consumer duty and TCF. TCF said you had the policy to make the referral. Consumer duty says you made the referral. What was that? Was that the right outcome from the consumer as it came through? So using technology to do this, what we're turning around saying is you review fewer calls, because if the green ones go through, you don't need to listen to them. You review only your high-risk calls. You might want to do some green ones because actually it's great to give feedback to agents as they go through with that, and it's a good training aid. But also, the classify system of actually being able to listen to a call and go back and forward on it and do it means that you can review that call a lot quicker. So actually, your expensive QA resource becomes a lot more efficient than it was as it goes through. So where we go in terms of that is there's a business case there to justify the investment in the tech. The tech is there and is proven, and it applies really well to structured calls as they go through that process. I'll whiz through that, etc. in there, because I know, listening from this morning, there were some questions. Scott had one this morning on keywords, etc., and that went through about how you can use technology to do that. Dennis talked about processes and strategy, and this feeds into that, because the dashboard will tell you where your strategy is working or not, and you can go revisit that strategy based on the outcomes that are coming through that you'll need to for consumer duty. Before we get into questions, though, I wanted to ask just a bit of a poll. Consumer duty. Is it top of your priority list? We've got 4 months to go. Is it top of the priority list? Is everyone nodding on that? Or is consumer duty sort of TCF but on steroids? Hands up, just to show hands, if consumer duty is top of your list at the moment. Okay. Small portion of the room, I think, in terms of where it comes to, it goes to. I think the difference is that I think a lot of us sit there and feel that TCF is there, we're okay, and compliance aren't pressuring us. But if you read the CEO letter that came out of the FCA this week, there's a lot to do. They're identifying gaps. They're identifying that actually there's another paragraph in there that says we sit back and rely on existing processes too much. So again, it will come up to. So sorry, that was good. The questions. Let's have a look. How accurate is a speech technology when considered different access language barriers, etc.? It's really accurate. It's been built based on that, etc. It's the lead architect of it worked on the team with Apple at Siri and it's really good at accents, etc. that come through. If I give you a stat that comes through the mortgage and compliance world today, 90%, there is over 90% agreement between a human reviewing a call and the AI reviewing the call. 90% agreement on that we've applied the business case and that call passed or failed the QA element of it. Can the AI cope with non-English speakers? Not yet, is an answer in terms of that. Can you classify elements of the call focus on customer vulnerability and complex needs? Yes. So there are vulnerability triggers that are in there that we don't work on just keywords. So when we're in there in keywords, the problem with keywords is, and there'll be people in the room that have been stung by keywords, etc. before already, that if you have a keyword that goes out there and you hear the word cancer, right, that may flag you as a call that you need to listen to as a potential health vulnerability. Right? You need to listen to the context in it. And the problem with keywords is you get far too many false positives. And from an FCA perspective, if you get told there's an issue with something and then you don't do anything in it, that's worse than not doing anything with it at all. So if you end up just on keywords and you get too many false positives, you end up having to put extra QA resource on it because you've got too many to investigate to go through, as opposed to the way we've moved away from that is the deep neural networks, etc., learning that go through that allow us to listen to that as we go through the process and take the context, not the keyword. Outcomes are key. What do you feel are the two high-level processes the FCA will look at? Loss rates, complaints leveling. Yeah, it's really difficult at the moment. I think we're in early stage, and the FCA have published these letters. What they haven't published is how they're going to look at the enforcement and the monitoring of it. And I think we're early doors yet about where that comes to in terms of it comes to. I don't know what they're going to look at. I think they are focused, and they are very focused on the consumer. And I think when we look at that going through that, they will come and look at those consumer outcomes. And they will come to you and ask you for the evidence of that. So if they come to you in December and say, they come to you now and they say, look, take me for December. Look at the last 20 people you sent for free debt advice in December. What was the outcome of those? Can you immediately go to that? Can you immediately pick that up? And do you know that outcome? Because that is the outcome they're going to be looking at. Not that you had a policy to refer them, but the action physically that you did, and then what happened to that customer in that process. That's the outcome that they say they're looking for. How easily can you integrate the software into QA tools and CRM ticket systems? Yeah, really easy. It's an API inside into that. So we take the way that we use the software, and I didn't mean this to be a sales pitch into the way it came, but the way we use software is we ingest your calls that come through, and then we provide you with that outcome coming back via an API. So we can plug that straight into an existing CRM system to be able to do that. What's the success rate and possibility of misclassification, trust in software? It can be an important if categorized incorrectly or miscompletely. Yeah, as I say, I covered that in terms of the 90% alignment rate in terms of where we go through. So if a human does it and the AI does it, we're at 90% at the moment. What we can't do, and what we can't do as we went through, and I said there was a saving on the FTE in there, we're not going through all the way in the customer journey. So we're not looking back at that customer in a month's time and saying what happened to it. There is still, I think, with my collections hat on, etc., I think there'll be some QA work that needs doing that isn't done today. Going and looking at those customer outcomes and looping them back into how they do. Because I think the dashboard will pick up what Dennis was talking about, whether your strategy was right, whether you got the right Ps. The dashboard will also pick up if you've got particular themes coming out and there are systemic issues or there are platform issues. And we work with Aram at the moment in terms of, I see in the building, we work with Aram in here who come and do some process work with people, and they do platform work with people, etc. So we've got people that can take our output and go through and do that to improve it. But it can't actually go in and there is that additional element of customer journey that you can't do from a snapshot or putting it through your QA today. Anything else? Hope that's been useful in terms of where we go. If there is, give us a shout. I can't be here for this afternoon, but if there are anything specifically on QA, specifically on compliance and duty, I've got a full team of consultants that are ex-FCA that look at this consumer duty stuff all the time. So I'm very happy for my team to answer any questions that you've got coming forward.
Thank you, Mark.
Thank you very much.
Take the clicker. Well done. Thank you. Thank you ever so much, Mark.